Welcome to a Now Explain Rough Cut video. This video is part of our manual bookkeeping series. You can find related videos on our YouTube channel or search the internet for a Now Explain Rough Cut. So now, let's get explaining. Supplier Ledger Control Account. What it is and why we use it. What you need to be familiar with. Source documents, daybooks, ledger cards, general ledger, supplier ledger cards, debits, credits. Other terminology you should understand: double entry bookkeeping, T-account layout. A supplier ledger control account is also known as a creditors control account, purchases control account, or accounts payable control account. This control account is one method of calculating the total money owed to your business by your suppliers. It will calculate the overall total owed to your suppliers. The individual supplier ledger card balances, when added together, should come to the same total of the supplier ledger control account. Control accounts use the values taken from the total columns of the daybooks. Supplier ledger cards take the individual purchase invoices, purchase credit notes, and supplier bank payments from the daybooks. How do you know if the total of the creditors list is correct? How do you know if all the suppliers are on the creditors list? The control account is our double check. The control account general ledger balance is the value that will appear on your trial balance and other financial statements. Creating the supplier ledger control account. Instead of posting all the individual supplier transactions, which are posted to each individual supplier's ledger card, we instead post the totals of the daybooks to the creditors control account. The total of all purchase invoices from the daybook, the total of all purchase credit notes from the daybook, and the total of all supplier payments from the daybook. From this we can calculate the total of all the suppliers added together. The control we are doing is checking that the individual transactions add up to the totals. The control account takes the totals from the daybooks and calculates a balance. The individual ledger cards take the individual transactions from the daybooks. The control account ensures that all the individual transactions have been recorded on a supplier ledger card. If one gets omitted, then the supplier's listing will be wrong and won't agree with the control account. Here is the supplier control account calculation. Here is each daybook showing just the totals for the months. The individual transactions have been removed. So here's the total from our purchase invoice daybook, 109,860. Here's the total from our purchase credit note daybook of €45. And here from the total column of the suppliers column in the bank payments daybook, €282.60. On the next slide, we will see how all these totals are used and also see how the individual transactions link to the overall totals. Here are the completed supplier ledger cards. Let's see how the individual transactions link to the control account. Let's start with the invoice. 57.60. Next one, 43.20. The next one, 24. 87.60. 158.40, 148.80, 120, 144, 225, and 90. So all those individual invoices total 109,860, and that 109,860 is what's in the total column of the purchase invoices daybook. So now let's look at credit notes. So €45 for the first credit note, and in total, since there's only one credit note, €45, and there's our €45 from the total column of the purchase credit notes daybook. Supplier payments, we have 57.60, 225, and that totals €282.60. And that's 282.60 is in the bank payment supplier total column. So using our control account, we can calculate the total of all the suppliers as a group. So there's €771. The total of the total columns from the daybooks should equal the total of all the individual transactions recorded on the supplier's ledger cards, because the individuals make up the total. The total of all the individual supplier balances on their ledger cards should equal the total on the supplier ledger control account. The creditor control account balance agrees to the supplier balance listing, in this case €771. We approve that all the individual supplier related transactions have been recorded on the individual ledger cards. This has been an explanation of supplier ledger control accounts used in bookkeeping and accounting. In a manual bookkeeping system, the supplier control account has the total values from the purchases invoice daybook, purchase credit note daybook, and bank payments daybook columns posted to them. These daybooks are set up to record line items and then totaled to allow easy posting to the control accounts. The creditor's control account is used as a double check to the manual process of listing supplier ledger balances, ensuring the business knows how much money it owes to its suppliers. This control account is part of the double entry bookkeeping system. For more information, go to nowexplain.com. Thank you for watching.